Good afternoon. Welcome to Business 360, your complete view of the stories driving business, markets, and the economy. I'm Apa Ongpin, and this is the Bilyonaryo News Channel. April inflation shoots past the central bank's forecast, hitting 7.2%. How are investors repricing rates, stocks, and bonds? We get the analysis of Vince Daffon, ATRAM Chief Investment Officer for Portfolio Management. Maynilad is reportedly positioned to enter the 30-member Philippine Stock Exchange Index. The Budget Department releases 43.18 billion pesos to speed up aid for vulnerable Filipinos. And we get a progress report on digitalization efforts under the Marcos administration. Department of Information and Communications Technology Secretary Henry Aguda Jr. joins us. Local stocks fall as investors price in higher than expected inflation. The Philippine Stock Exchange Index was down 0.74% to settle at the 5,800 level. April inflation shot up to 7.2%, far above the Bangko Central's earlier forecast of up to 6.4%. Majority of the day's most active stocks are in the red. Banking names were among the most active, with BPI, Metrobank, and BDO all trading lower. Mining and oil shares were also weighing in on the market, but some stocks bucked the sell-off, such as Ayala Land and Maynilad. Maynilad rose more than 1.5% over reports it could enter the 30-member PSEI. In an Insider PH report, First Metro Securities said Maynilad is eligible for early inclusion in the PSE index. The water concessionaire is expected to meet the 6-month minimum trading requirement before the end of June. In other corporate stories, Metrobank reported 12.6 billion pesos in first quarter net income thanks to higher interest margins and strong lending volumes. In Wall Street, stocks pulled back from record highs over new clashes around the Strait of Hormuz. The Dow Jones dropped over 1%. The S&P 500 fell 0.4%, while the Nasdaq is down nearly 0.2%. A sharp spike in global oil prices fueled a sell-off in Wall Street. That's after U.S. and Iranian militaries traded shots in the Gulf last Monday. But analysts say the pullback does not yet signal a break in the broader rally. They point out that all three major indexes are still trading well above where they started the year. April inflation accelerates to 7.2%. That is far above the Bangko Central's forecast of up to 6.4%. Ches Sulit reports.
Fuel costs driven by the ongoing conflict in the Middle East continue to weigh on consumers' pockets. The country's headline inflation rate for April 2026 spiked to 7.2%, a 3-year high since March 2023. Based on the latest print, food, transport, and housing costs were the main drivers of the accelerated prices of goods and services. Food inflation at the national level recorded a faster annual increase of 6.1% for the month of April. The PSA reported that the uptrend in food inflation was mainly driven by the faster annual increase in the index of rice. Fish and other seafood was the next main contributor.
Hindi lumalabas yung ating mga fisher folks, syempre bumababa yung ating production, and one of the major reason, of course, is the input price, which is the price of fuel.
National Statistician and PSA Undersecretary Claire Dennis Mapa also noted that gasoline and diesel prices accelerated in their highest levels since rebasing the Consumer Price Index to 2018. The PSA recorded a whopping 122.7% inflation rate for diesel in April 2026. Meanwhile, gasoline inflation also accelerated to 59.6%. The country has faced multiple weeks of oil price hikes since the Middle East conflict intensified in late February. Mapa also said that the purchasing power of the peso dropped to an all-time low. Your 1,000 pesos 8 years ago is worth only 730 pesos today. The business sector renews its call for immediate relief amid market headwinds. For stakeholders, every small step counts to help reduce their costs.
Kulang yung pagbibigay mo ng ayuda to address inflation. Kulang yung pag-price cap natin sa diesel, pag-price cap natin sa presyo sa grocery. Everyone is asking for tax cuts na, whether it be the excise tax from the emergency powers or some form of legislated reduction in VAT.
The Bangko Sentral ng Pilipinas previously forecasted the April 2026 inflation to hit 6.4%. For Business 360, Che Sulit, Bilyonaryo News Channel.
With higher than expected inflation, many are asking, what will the BSP do next? And what would this mean for bonds and stocks? We get the market read of Vince Daffon, ATRAM Chief Investment Officer for Portfolio Management. Vince, April inflation came in at 7.2%. What's your read?
Right. Thank you, Apa. And first is good afternoon to yourself and also to your viewers today. A very timely discussion we have because today's inflation print was actually one of the more anticipated ones.
Yes.
In the past few months, we've seen a increase in terms of price increases over the past few months, starting with 4% in March. And we were expecting a higher number today, obviously, but much higher print that came in at 7.2%. I guess the question is what's causing this, right? And one factor obviously is the higher oil prices that we've been dealing with over the past 2 months or so. It's been a pain going to the gas stations, as we may know. But I think one factor that also seeped into this number is the high rice prices. That continues to be elevated. I think this is a bit of a surprise, I would say, to the market. Hence, the higher than expected print. But so that's there. I think the markets have been largely anticipating elevated numbers. Hence, prices across different asset classes have adjusted, most especially in the bond market, as you mentioned. Over the past month or so, yields on our government bonds have been trending higher, almost at, I would say, extreme levels, right? For example, the 10-year government bond is trading at about 7 to 7.25%, which is...
Haven't seen that since like the 90s.
Well, we have seen it in the past number of years, but I mean, for context, just before the war started, it was below 6%.
Yeah.
So it's a massive move, obviously, and driven by this inflation, the actual inflation, and also moving forward the next few months, inflation expectations. Now, as investors, I think the question here is, how do we position our portfolios in this? And if you go maybe in a bit of history, we've seen these levels, inflation numbers and the corresponding bond prices back in, most recently in 2023, right? And but based on that experience, inflation came down very quickly, right? And in tandem, the bond yields also came down very quickly. So very protracted, I would say, experience at that time. But that is the question that we have in our minds now, given obviously what's going on externally, what's going on in the Middle East, right? News flow has been relatively quiet the past number of weeks, right? And of course, why is that? Obviously, one party wants this thing and the other party wants this thing. They're finding it difficult to find the middle ground. Hence this impasse, I would say. But and that's a risk, right, to the markets in general. I think especially for us here in the Philippines, the longer that this persists, then oil prices will continue to remain at elevated levels, and hence inflation potentially will remain, hopefully not, right, but at high levels for longer than maybe what the economy can really handle, given it's already being stressed by other factors. Yeah.
Well, other countries in ASEAN are seeing the same stresses, right?
Yes.
But I guess they're probably a little more resilient than us when it comes to that
Right.
particular factor.
Right.
What do you think the BSP is going to do next? You know, the pattern this administration has been fight inflation at all costs, because inflation first hurts the poor
Right.
the most.
Right, right. Yes, agree to that, Apa. And I just, every time we try to maybe discern what the central bank will be doing, I guess we also go to their mandate, right? Which is really price stability, number one, and full employment, right? So obviously price stability is now being challenged with this number and what we may face in the months ahead. So we've seen them take action already, actually, right? That in their last monetary board meeting, they did increase the policy interest rate by 25 basis points. So it reverses the easing of policy rates that we've seen over the past 12, 18 months. We came from a high of 6.5%, right? Now came down to us at 4.25. Now it's at 4.5. So if this persists, I think we can expect the central bank to continue to take action. Maybe hike rates a bit more. But of course, you'll have to balance that, right? Because higher interest rates will mean higher costs of capital.
Yes.
And then it will ultimately may hurt growth, which already is being challenged. We've seen the GDP print for Q 2025 lackluster, like 3%.
Yeah.
And we're expecting the first quarter number to come in on Thursday, and the expectation is thereabouts. So nothing to phone home about, I would say, right? And short of it is the economy in general really needs as much help as it can get at this point, and higher interest rates or policy rates, hence higher bond yields, will again ultimately make capital more expensive, then put a cap or restrain businesses from capital expenditures and all that, which again should be which is what we want, right? So that's going to be the challenge, I would say.
Okay. Well, beyond monetary policy, what needs to happen on the fiscal and supply side to keep inflation from becoming even more persistent?
Yes, good you brought that up, because we can argue that higher policy interest rates will not necessarily or directly lower the price of the basic goods and services, right? So it's more a supply issue, right? And maybe some evidence of that can be seen again in the inflation print today, right? Headline is at 7.2%, but there's also the core number, the core inflation number, which came in at 3.9%. It was 3.2% in March and 3.9%. So that's high level, or generally that's okay. So it's really the headline that's a concern, which again is driven by the food, driven by transportation costs, and then the housing costs, our electricity bills, and all these utilities. So this is a headline number that's really putting pressure on prices. So on the fiscal side, to your question, really to me, it's really being able to address this supply challenges that we have, especially on rice. Again, it's the heaviest weight. Food is the heaviest weight in our CPI basket, in contrast to other ASEAN countries where it's much, not much, but a bit lower, right? So I think that's one key element that needs to be addressed. And it doesn't help that it's subject to, our production, our farm production is subject to weather conditions. And I just read something that came in today that potentially there will be extreme weather conditions or heat in the next few months or so, which
and also
can challenge.
There's a huge challenge with regard to the supply of fertilizer, urea-based fertilizer, which all comes from the Middle East.
Right.
And that's going to, basically what that's going to mean is that many rice farmers are just going to exit. They're just not plant,
Right, right,
you know, because they can't afford to.
right. So again, I think these are maybe I would say structural issues that I mean it may not be addressed in overnight, but I think if we're going to do something, it starts today. And
Yeah.
for the,
We had a similar scenario in 2022 in December. The inflation went up to 8.1%. That's,
8.1%.
you know,
right.
it's early in the administration,
Yeah,
which
yeah.
prompted the BSP to hike the policy rate to 5.5% at that time. Do you think we're looking at a similar scenario?
Yeah, well, again, I think it goes back to how persistent this environment will be. I think if the regulator had a choice, he would not be too aggressive
Yeah.
in hiking the policy rates, given the potential consequences. But again, if it remains persistent, then they might need to really be to undertake this action, right? And then I guess if it does happen, I think what we are counting on as investors is for the regulator to also try to stay ahead of the curve in a way.
Yeah.
That if they see signals that inflation pressures are easing, then ideally we will take back these restrictive policies before it. Last thing I think we want is for these the headline factors to seep into the core inflation environment, wherein the price levels absolute levels are already too high, and then real wages are not adjusting commensurately.
Well, that's precisely, you don't want to have to adjust wages because that's a perfect storm. It'll cause more inflation.
Right. These are the
You'll pay
the
people
second
more
round, the
money, but
so-called
it won't be worth as much.
Right.
You know?
Right. Exactly. And of course, these are, you can argue that you look at core, headline might be volatile, and you look at core, but it's the headline number that's really affecting, the pockets of us, of myself, yourself, everyone, right?
What's your fearless forecast on full year inflation?
Full year inflation
after
wow.
the 7.2%.
Right.
I mean, let's forget about the target of the government because that's long gone.
Right.
And in fact, that they were able to sustain, less than 2% inflation after a period of very high inflation.
Sure. Yes.
Was something.
Yes. I agree. Now, back in 2023, we saw average at that 6%. Came down to about 3.5, and then last year it was below 2.
Yeah.
So I think that was a good, good work. I would say, by the regulators, and I hope the same resolve will be done in this scenario. But to your question, hard to pin it down right now. But maybe we may see in the 6% handle is based on what we've seen and what potentially may come in the next few months. So we may see levels at around on average about 6%.
That's
Still.
bad, but not horrible. I mean, we've survived 8% before. Right?
Yes, and then going back to that, it's these periods of really high inflation were relatively shorter periods, right? And I think that was the key there. Again, what will bring it down may not necessarily be within our control in this case. So I guess it's really just we're hoping for quick resolution of this conflict. And but you can also argue that even if conflict is resolved, global oil prices may not fall to what is now 100 to 110, back to 60 to 70 right away. Right away. So, I mean, ideally it will be that quickly, but it may not be. So I think we should just be prepared for that, scenario, and adjust portfolios accordingly. That may be more defensive in a way in different asset classes.
Yeah, so that's just going to cause growth to slow across the board. if growth disappoints and the inflation stays hot, you think this market's going to start pricing for stagflation?
Well, we will see. Actually, we will see an actual maybe example of that in within the week, right?
Yeah.
When we see the GDP, and more, I think investors or different investment houses are kind of pricing this in
Yeah.
their positioning. So maybe in our case, we've done that, being a bit more defensive, both on the bond side, even on the equity side. So I mean, period of high uncertainty. I think it's really it behooves us as managers, as money managers, as fund managers, to try to shield or protect the portfolios as much as we can. Of course, still aligned, no, to the investment objectives of the different funds that we manage.
Fitch has already revised the Philippines' outlook to negative. Does this inflation print make the sovereign risk story more difficult for investors to ignore?
Well, I guess short answer is yes. I think if you try to read into what these global credit agencies are thinking, I think this has already been kind of considered as well, right? So it's a good thing. It's a what is it? An outlook only an outlook downgrade for now to negative. So we have maybe in theory 12 to 18 months to kind of turn things around best as we can, so we can at least get that outlook back up to positive, right?
Yeah.
And avoid this an outright downgrade of the rating. This is something that we, of course, we want to protect as much as we can. Yeah.
We've seen major corporates start reviewing their capex and actually even cutting capex in the last couple of days. Does that become a growth risk for the economy and a warning signal for your market, the equities market?
Again, yes. I would say, yeah, short answer is yes. No, if you look at what really drives, what drives the GDP, in locally, of course, the consumption domestic consumption has been the source of strength traditionally for us.
Yeah.
But if we see these elevated price environment, then that might cause the consumers to kind of pull back a little bit.
Well, they're
So
going
that
to
is
have
at
less
risk.
disposable income.
Yes, and then there's the investment piece, right? Private investment. Again, if interest rates remain high, then that will make the CFOs think twice about proceeding with capex, and then that will also potentially reduce that. And then government spending is one area perhaps that we've had tradition or historically been also a source of strength, but the scenario over the past few months has pulled that back as well. Although in the first quarter, I think we have seen a little bit of a bump with government spending, and that is the hope again is to wrap it up.
We have an item later on in this program about the government approving 3.41 trillion pesos of infrastructure spending, primarily in railroads. That's interesting.
That is very interesting. Obviously, infrastructure is one of the key pillars of multiplier growth. We've seen this in other markets. Once you build the infrastructure, it really leads to potentially exponential growth across different sectors of the economy.
Railroads is a much better, more efficient use of fuel and energy than trucks.
That's right. That's right.
Quarter one earnings are already showing a split market. Banks and power names still have support, but property and consumer names face more pressure from rates and household costs. How should investors position around that split?
Right. And again, the general scenario or environment is that it's very unpredictable, but in terms of where to position, again, a high interest rate environment will necessarily make us be a bit wary about rate-sensitive sectors. As
Yeah,
you
of
mentioned,
course,
the property sector, we've seen some results come out, and it's quite weak.
Well, that's also fallout from the POGO exit. Huh?
That's true. A number of other
Kahit
externalities,
paano,
I
yeah.
would say, that
Yeah, we
affected
overbuilt
that. Right.
for POGO.
Right. So, but maybe we can focus on what pockets of opportunities that are there, and then maybe perhaps exposure to the energy, whether different parts of the chain or in energy, both locally. You know, there are ways to express these positions
Yes.
in this sector. So I think that would be one thing to look at. Yeah.
Quarter two earnings should more fully reflect the energy crisis than the first quarter. Where do you expect margin pressure to show up first?
Again, I think more for those companies that are not able to quickly pass on these higher, maybe input costs.
Yes.
That would be one area that if you look at perhaps the balance sheets and the financial statements of these companies who we think may be sensitive to rates, and then we make an assessment of which among these are not able to pass this on again quickly, then there might be some pressure here on margins to compress as well. And then in other areas, maybe the financials, it bears looking at balance sheets again. You know, for certain, let's say, banks that may have access to lower costs of deposits, for example, right, where they're able to source funding cheaply, even if policy rates are quite high, then these might hold up fairly better than others.
That's an opportunity, actually, no? Yeah.
Yes. So again, it goes back to in the Philippine market. You know, the index. On one hand, it's a good thing that the index is staying at 6,000. But on the other hand, it might not be so good as well, right? That it's still at 6,000. But we've seen in these cycles that there are still winners and losers, and I think it behooves us again as investors to really do the research, do the homework, and identify these companies that can benefit from different business cycles.
Yeah. Filipino corporates are not exactly lining up to issue new bonds or equity fundraising. If with the rates moving higher like this, you think that's going to be a long delay?
Yes, I do think so. Yes, to a certain extent. If you are again if you were a CFO, for example, right, and you need financing, if you can kind of delay it a bit, or maybe have access to shorter debt instruments or facilities, then maybe you can explore bridging it for a while. Again, but constantly assessing what's happening around, because at one point you might need to make that decision to just maybe take in the higher costs and borrow longer. And so that's on the debt side. On the equity side, it would be as an investor, it would be great if there would be more new capital raising activities from different companies. There has been a dearth of that, I would say, in the past few years. But again, we need, I think, more. Again, I'll cite the need for maybe more liquidity in the market, to strengthen that institutional bid that's there. Of course, we have our traditional investors like the government financial institutions, for example. But I think this is an
now
area.
the Maharlika Fund.
Yes, as well. But again, even more than that, I think the more retirement sort of capital. When people really put that mindset of needing to save for long term and really devote capital to this, then that is, I think, an opportunity for real capital market development in terms of breadth, in terms of the depth of it, and that ultimately should bode well for the Philippine capital markets and hopefully put us at par with some of our neighbors. And that is
Yeah.
that is a dream.
Yeah.
That is the dream. Yeah.
Okay, last question, and this is sort of a kicker. What should we buy and what should we avoid? Gold, bonds,
Okay.
stocks.
Right. Okay. So now, I think where bond yields are, government bond yields are very attractive. I would say that 7 to 8% yields are historically have been very attractive. So there's an opportunity to have that income, the interest income, on one hand. On the other hand, there's also potential for capital gains moving forward. So I think at this time, today, fixed income is looking attractive. And equities, again, I think you have to be selective here. I think you have to just do the homework, and stocks. Security selection is key. In terms of commodities, I think gold is still long term, again, is still attractive. We have structural. The question here is who's buying, right? And what we've seen, at least, is there's some structural buying from governments, for example. We've seen them ramp up holdings of gold. So we know that these are again, I would say institutional or sovereign, even sovereign. There's a sovereign bid, so there should be support there as well. Yeah.
Okay, well, thank you very much.
Okay.
This is a very insightful discussion, and
Thank you, Apa.
good luck to all of us.
Yes. Good luck to all of us. Thank you.
Coming up, a progress report of the Marcos administration's digitalization efforts. This is Business 360. Welcome back. Digitalization is one of the Marcos administration's biggest governance promises. But how much has changed on the ground, especially for businesses dealing with government? We get a progress report from DICT Secretary Henry Aguda. Good afternoon, Mr. Secretary.
Good afternoon, Apa, and to all of your listeners.
It's a big priority, obviously, of the Marcos government. What can the business community point to as tangible progress so far on this issue?
So on the business community side, the biggest issue they have is ease of doing business.
Yes,
diba?
of course. Yeah.
So on the ease of doing business, we're putting a lot of our systems on digital platforms in various shapes and form. Now, the ICT's role is to stimulate that environment where they can easily digitize and onboard. So there are great stories like GSIS has automated very well. SEC, I was just talking to the chair earlier, Francis, and he's new. He just joined in, but he has an aggressive plan to automate, especially the business permitting. I think one significant change that will happen soon is the national single window.
Yeah.
So all exporters and importers have long dreamt of a single window transaction because in the past, about 70 or plus agencies have their separate systems. So they're all coming together this year in phases. We just had a discussion with the Anti-Agriculture Smuggling Task Force, which will push the national single window. The first one is the Tobacco Authority. So we'll try it out with them first. And you know how technology is. Once you have a great pilot, you just expand it. And for citizen services, of course, there's the eGov app. Now, the eGov app, not a lot of people know, already has 41 million citizens onboarded. A lot of people know them as the digital ID repository.
Yeah, in fact, it crashed because there were so many users. No?
So not just 41 million, but it also has about 1,000 plus services. So the services that got affected, I think that was 3 months back, sorry. No, sorry. 3 days back, I can't remember. There was a service maintenance that happened in tranches. There was a 4-hour service maintenance and a 7-hour service maintenance. In our eGov team naman, they're very conscious of the fact that people are using it and relying on it. I think they did it on weekends naman. So right now, it's working, it's running. But you know, such is the price of success.
Yeah.
And we know this, like most application that scale very, very fast, and I've experienced that in my previous life, in the bank. When you hit a certain level of success, it just escalate. Hockey stick. Yeah. And of recent events where people were asked to go work from home, right, and compress work week, the jump in utilization is tremendous. And good because now the adoption is there. It's been proven that people can use it and want it. I guess the challenge for DICT right now and our team in eGov is to catch up with the demand.
Okay, but you know, speaking of eGov and national single window, part of the problem that we perceived in the private sector was that all of the agencies were operating in silos without regard for each other. So, for instance, you're an importer, you have to deal with BIR separately and then customs separately.
Yes.
You know, and then DTI, and then, you know, all of this stuff.
Yes,
shouldn't the role of DICT be the one ring to rule them all?
Yes. So in Jensen, we had the May 1 celebration with the president, and we were going around the room with TESDA and with DOLE. And TESDA showed an application that matches your resume with available jobs in the market.
Yeah.
You put an AI in between, it's job matching. That can't be done if we do not harmonize the databases.
Exactly.
Now we're proceeding into that more aggressively. And it doesn't, it's not an easy feat where the eGov right now has been able to get other databases in the harmonized system. The eGov does not hold all of the databases.
I know.
Yeah.
That's exactly the problem. They're all in silos.
So they do API. So you also don't want to put all the databases in one repository.
Of course.
Because it becomes inefficient. So what the team did was each database, let's say SSS database, they API call to the national ID to verify the identity of a person.
Right.
Okay. So in the past, in order for you to do that, you'll have to do a memorandum of agreement between agency. The fortunate thing for me, when I took over as the ICT Secretary, we were in the last stages of getting the eGov Act approved.
Yes.
So it was approved in law, signed by the President last year. The implementing rules and regulations were published last month. So now, yan na, game na yan. So I committed to the President, we will now aggressively win everybody out of the multiple IDs. There will be IDs that will remain in physical form. Konti na lang yan. But most of them will be digital ID on the eGov app. So if you look at your eGov app, you can see your PhilHealth ID, your driver's license, and several other IDs.
Yeah.
So the eGov becomes a repository of several IDs. And once it's in the eGov, you can be assured that they all home in to the national ID system naman.
Right,
Yeah.
right.
So it's there. So identity is the first layer of the technology stack. The next layer would be business permitting, business identity number, the
That's-
universal business number.
A lot of that is LGUs naman, di ba?
Tama. Oo.
Yeah.
Oo.
And, you know, I mean, I don't want to name names or point fingers, but there's a lot of fake digitalization going on. When I say fake digitalization, it still involves personal appearance, especially to pay. There's no online payment possibility. And then there's a lot of human intervention still required. And a lot of it is merely reinforcing an existing paper database.
Yes.
You know?
Yeah. So you know my solution there. So I shared this to the president also. One of the measure by which we can check how well we're succeeding is if we end this year with less paper cost.
Yeah.
That's the enemy. So in my previous life, I was, draconic in my prescription to all the branches. I'm notorious in Union Bank. As you may have heard, if I see paper in the branches, I just remove them. And my policy there is bring your own paper as opposed to bring your own device.
Yeah.
So I'll give you the device provided by the company. The paper, you bring your own. Printer, you bring your own. So that has actually forced everybody to automate. Now, the government is a much, much bigger organization.
Of course.
And really, every single day, every hour, every second, we're servicing citizens. We cannot just yank paper away. But we're pushing for that. The e-docs solution that has been implemented by the eGov team in the eGov app, that's there. It's ready. We just need to now have the political will to eliminate paper, printers. The day will come, sana, sooner than later, where if there are no more stacks and stacks of paper and folders and hindi lang sa it's going to be much faster, we will save a lot of money. With manual processing, there are costs associated with paper. The paper, the pen, the folder, and a big component of it is storage and warehousing.
Of course.
You remove that, you free up a lot of real estate that you could do more with. At the same time, the processing of citizen services would be much, much better.
Yeah. Well, it's really a question of reforming the process. It's not
That's
just
right.
purely, you have a computer front end. That does nothing.
That does
So you really
nothing.
have to work with ARTA and these people. Because, but which agencies are genuinely moving, would you say?
Well, the ICT for one. We have to eat our own dog food. DBM is moving very fast on that one. Some notable agencies that I've seen, PhilHealth. If you notice in PhilHealth, just to give you an example and just to punctuate the point that when you automate, services improve. The claims processing for hospitals and care facilities, 2 years ago, maybe the average is about 2 months. That's average. That's average. 2 months the average. And it can swing anywhere from 6 months to a year. Right now, the average is less than a month. It's going down. I think their target for PhilHealth is make it as low as 2 months. That's automation. They barely scratched the surface pa lang. They just made the system stable and secure. And if there's a knock-on effect. If you pay your providers more efficiently, they will provide more services. So like they doubled the number of claims that they've been able to process for the citizens also. So PhilHealth is one example. It's not perfect. None of them are perfect. But they're
good
moving.
Improvement. Yeah.
Good improvement. The Supreme Court, as an example.
Great.
They're now moving aggressively into going into e-courts. So I had a meeting with them before, and they're really moving fast. The Congress, a nice example. I'm saying this so that you can see and feel it's spread across the government. Congress has put the budget on the blockchain. First in the world yan. At the same time, they're now giving iPads to all their 300-plus congressmen, where the aspiration is in the next session, they estimate about 50 or 60 of them will now be using iPads, where they can vote on the iPad, they can do secure conferencing and meetings on the iPad. There's about 25 of congressmen using that right now. Maybe the adoption will move much, much quicker in the next coming sessions. So, madami. On the LGU side, I've seen what Makati has done, what Quezon City has been doing. So, it's spread out. Now, the challenge of the ICT is how do you accelerate that further? And me, I have a short window. I only have 2 years to do as much as we can. There's also another aspect to it. What good is having an app and a system if you don't have connectivity?
Yeah.
Yeah,
That's
so
very true.
it starts with the infra. You're only as good and as efficient as your infra. So we're now moving to geographically isolated areas where we can now put connectivity. Example, I was in Mindoro, in the indigenous people there in one of those towns. The impact of connectivity in terms of government services is tremendous. Before, in the mountains, they would worry when their kids are sick because there's no way they can bring their kids get to the health center. They had to walk 2 hours barefoot going down. Now, with connectivity, their barangays can reach them. And we're working with companies such as MWell to provide telemedicine. So there's a lot of it. I think one of the things that I should be doing better is to communicate to everybody. Not a lot of people still know. Now you can renew your license on eGov app. You don't have to line up na. So yeah, there's a lot. There's a lot actually.
Professional license or driving license?
Driver's license, driver's license. Yeah.
Yeah.
So-
That was a long time coming. The LTO is a real example of how not to do it. Huh?
Well, they have challenges on their own, but I
They
think
have
they're
2 providers
well.
at conflict with each other.
I wouldn't get into the details of that, but I think right now with the new leadership of LTFRB and LTO, they're coming together. Now, I tell you, as you said, it's a long time coming, but yeah, better late than never. Might as well do it now and do it intentionally.
Okay, well, that's about all. I think we've gone through all the topics.
Yeah.
You know, this is a very hopeful scenario. Good luck in the next 2 years. Huh? There's a lot to do.
There's a lot to do, not a lot of time to do it with, but with everybody's support and with everybody's intention to pull together, I mean, the vision of the President of a bagong Pilipinas that's digitally enabled, I think that's within reach.
Yeah, that's great. Thank you, Secretary Henry Agudo. President Marcos orders the release of 43.18 billion pesos to speed up aid for vulnerable Filipinos. The funds will be channeled through the DSWD. This will support financial assistance, food programs, pensions, and livelihood projects. The largest allocations go to protective services for families. Next are child feeding, social pensions for seniors, and sustainable livelihood programs. Officials say the release ensures aid reaches beneficiaries quickly upon the President's directive to avoid delays and bottlenecks. And that's Business 360. We'll keep tracking the moves that matter across markets, policy, and the economy. I'm Apa Ongpin. Thank you for joining us. Keep it here on BNC, the Bilyonaryo News Channel.